Hi, this is Randy Finney with Right Side of the Chart, and this is a morning session update for Friday, October 25th, 2019. All right, so I'm going to start out here with the broad markets, and we'll touch on precious metals and some of the other things I've been highlighting recently. We'll look at cannabis stocks, crude, natural gas, as much as we can get in this video. Try to get it out to you guys. All right, first and foremost, most important thing today is we have QQQ taking out that downtrend line off the recent highs. And again, we've been within striking distance, and we still are of the previous highs. We have a high right here back on July 26th of 195.55, and we're at 195.21. At this point, it's almost baked in the cake that we'll probably get that breakout to new highs. So that's, usually when you get this close, you're going to get there. So we'll see. But it's a technical breakout. So you can say what you want about how far it might go, but right now we've taken out that downtrend line. Let me show it to you on the 60-minute chart. There it is. Here's the downtrend line off that high on July 26th. And a breakout today. Now, we have divergence, but like I said, divergence can continue to build. Divergence can be negated. Most importantly, on the 60-minute chart right now, the trend is still up, and the momentum indicators are pointing up. We did break the price channel the other day, and we back tested. We back tested for a couple days. We're a little bit above it right now. But again, you have to look at, various technical developments, and of those you have to rate them, if you will, and you have to give the highest rating to the fact the market is close to new all-time highs. Now, as I've been saying for a long time, this market has had a clear pattern of breaking out every few months, taking out the previous all-time highs and doing it, putting in a marginal new high anywhere from less than 1% up to about 3% or so. I still think that'll be the case, but in the very near term, the momentum is to the upside. And also remember, that's where my scenario is. That's what I think will happen, but we don't have any sell signals, and you'll still need to see a sell signal. That can come in many forms. It can come in the form of let's say a bearish candlestick or candlestick pattern, such as a bearish engulfing candlestick, or some type of candlestick top, some type of doji. But usually I like to see at least 2 or 3 successive candles, candlestick formation that may mark a top, and some have a higher probability of success as a topping pattern than others. But right now we don't have that. We just have a big green candle popping through those previous highs, making a run close to those other highs right there, the all-time highs. Same story in SPY. SPY, you have the previous high right here. The all-time high in SPY is 302.63. We're at 301.72. So again, we're within striking distance, and that's right now we're not far from there. But as I've said, there's a lot of securities, like many of the longs that we've been focused on lately are stocks that I look for a buy trigger when we break above resistance. The reason that I'm not looking to add SPY or QQQ as a swing short position or a trend trade is because some breakouts I look at and I either expect them to fail or think they have a higher chance of failing, like these. Or in other breakouts, I look and they look to be triggering objective long. So, like the cannabis stocks recently, looking at support resistance levels and trend lines, I was looking for a breakout. Bitcoin, we'll get to that in a second, things like that. And so, like I said, it's in this particular breakout, I think there's some upside to come here a little bit near term. I'm riding this wave up today, my trading account, because we're, so far pretty bullish price action. Now, let me start out with what happened in the futures. Somebody asked this morning about the futures, or mentioned that ES broke the trend line. It did, ever so slightly, but my reply to that in the trading room was, I like to wait until the starter step on the field if you get a breakout that occurs right before the open. So this is the 60-minute chart of ES right here. And so the trend lines I'm referring to right here, we have a trend line off the lows there. You can move this trend line. Yesterday I had it slightly above, I had it like this, but we didn't break down impulsively, so I moved it down to right here to catch these candles. And you can see one little red candle, not very impulsively, and that happened this morning before the market opened. Here's the next hourly candle at 8 a.m. We went back and back tested, and then the market opened right here. There's your market opening candle, or so I think it was that one. one, and boom, the players stepped onto the field and they bought this up aggressively, and they took it right back above the trend line. And that is why you wait. As I often say, wait till the starters step onto the field. They come on at 9:30 a.m. If you run a multi-billion-dollar hedge fund, you cannot successfully trade and navigate and make trades in the after-hours, late-night session, because there's not the liquidity. You need a lot of liquidity to most efficiently trade. And so that's why, and you can see it if you look at a 1-minute chart, and I'll show it to you. That's what happened at the open today. Here's 1 p.m. 1-minute chart. There's the open. We gapped down, but look, they came in and they haven't looked back. They started buying up the market, and we have all the makings of a trend day so far today. Okay, so where we go from here, like I said, we'll have to watch. We don't have any sell signals, make it clear. So even if I am right on the marginal new high followed by a reversal scenario, we need to see some sell signals, some reasons, some evidence to get short, not just a break of any break above the previous highs. We're close to it now, and again, let's move away from the equity markets. Like I said, so far the near-term trend is up. It looks like it's baked in the cake. We're probably going to pop those highs, and then from there, how far we go. So if you see a trend day like today, you get long, and you just kind of stay long unless you see some kind of reversal intraday. That's probably the best play, or stay out of the market right now because the risk reward's not favorable. The metals. Earlier today, right here, I was able to short PL after closing out silver. I went home, silver last night, but yesterday going long in the breakout. As I said in the morning, I thought silver had more upside or would play a game of catch up and outperform the precious metals, and it did. It went up from yesterday's lows 4.5% versus about, what did I posted on the front page? 1.5? No, it was a 4% gain, I think, versus 1.5 for gold. But here's what's happening: the markets are rallying. I just went over the case. We saw some nothing but bullish price action since the open, and the metals kind of sat there thinking about it for a while. But all the while we hit resistance. So we had gold at right here. We broke above. Nothing but bullish price action over the last couple of days here. Don't get me wrong on that. However, you have the stock market rallying and the stock market threatening to break out to new all-time highs. And so you can't expect a continued flight to safety bid in gold. So gold broke out above the triangle right there, and then went on and then had consolidated right at the secondary trend line, the more important longer-term trend line, and the 1504 level, broke out and rallied right up here to this 150 or 1522 to 15. It's about 1520 to 1522. It's a resistance zone, a pretty good one too. And so that's of course what stopped it today. And had the market, let's say, gone the other way, then gold may have easily broken out. But the fact you have the stock market rallying right now, it's taken that flight to safety bid out of gold. Where does gold go from here? Well, we'll keep an eye on it. Longer term, there's still potential for a breakout of that weekly chart, the bull flag pattern that I've talked about. In fact, we're above that right now, but we're going to have to, no matter what happens today, we'll want to see additional follow through tomorrow to confirm any type of breakout on that weekly chart. That's just, there's not enough hours left right now in the trading week, and gold just started making this move. So what would undo the price action, or the bullish price action? Well, move back here. That would be healthy to just come in and back test the 1504 trend line level. I don't think we'll even get that low. I think the markets have limited upside and will probably not come in and back test. That's my guess. That's what I said to somebody in the trading room. Make it too easy. This was a pretty impulsive breakout. Markets don't like to do easy, so everyone looking for a back test, you may or may not get it. That's all. I don't know. But if we do, that would be the first level. And of course, you have this trend line here. So really what I'm looking, here's the level I'm going to show you right now that gold ideally needs to stay above to keep the bullish outlook intact. It needs to stay above, most importantly, this uptrend line right here, the bottom of the triangle. That also comes in right around that key 1492 level. I've harped on that for months now. 1492 was a great support level, had been for many months in this trading range. We had a false pop, brief pop and a regain of that level right there. So back above it, 1492 held. Couple more pops recently, and that's really what gave us this triangle. So that's why I'm focused more so on this trend line, but it does come in with that 1492 level. So really that's about it. Anything much more than that doesn't bode well for gold technically. And if that happens, it's probably going to be because the stock market continued to build on the gains if it breaks out above these new highs that it's coming very close to right now. So there's the snare for gold. So kind of wait and see. And again, I was in and out for me because we had such a big run, and mainly because of what happened in the stock market. So right now, I reversed it. I picked on palladium of all, because I'll show you why. Palladium, actually gold and silver started reversing earlier today. And where's my palladium chart? Right here. Palladium had run into that 940 60ish target right here, and was still up, going up, while gold and silver had started to reverse. So that's the one I took a shot on, and I'll tell you, it might not even prove to be the best one, but I pointed it out this morning. Also, it had negative divergence here, potential divergence right there. It's still not confirmed, and I'm just looking for a pullback to the bottom. You have two trend lines here, no more than this 926 level. That's all I want to get out of it at this point in time. I may trail stops down. If the stock market continues to run, at most, I'd be looking for a pullback here, and that's where palladium really needs to hold above this support zone here. So depends on what I see today, whether I just close that quick short out or I trail it down, trail stops and let it run, see if it can build into anything more. And like gold, worst case scenario really is this trend line here. You have an uptrend line off the lows, also from its triangle. Remember, palladium had a symmetrical triangle as well, and so that would be about as much as it could give back on a pullback and still keep the charts constructive. Anything much more than that doesn't look good. You come on back down probably to that 874 support again. I've looked at this as just a mosaic of 1 and 2 minute charts. You actually have some support right here on palladium. Palladium's pulled back. Gold a little bit, not hard support, and yeah, I might close that one out. I'm still in it right now. I'm gonna watch it. I'm not gonna give it much more room on the bounce. And again, I gave you some levels that if the stock market continues to go up, some levels we'll watch on these metals, but I'm just drawing trend lines on these 1 minute charts. You can see here, this is GC, gold, silver, platinum, and you probably can't make that above. My next chart above is palladium on this monitor here. Okay, Bitcoin, just a quick update there. Still looks good. I think it's overshot. Bitcoin, if you recall, had this big level back here, 1222, and said, look, if we break that, looking at least a 25% drop, which we did, down to my target 882. Now it overshot that target by a little bit, but not much. That's about 5-6%, these two candles below that level. 5-6% is nothing. If you're trading treasury bonds, that's a big move. If you missed a treasury bond trade, an entry, and it went 5 or 6% below, you were wrong. You got stopped out. That's a big loss because you take a big position in treasuries. They don't usually move that much. Bitcoin, that's run-of-the-mill. This is the low off the lows here earlier this year. Bitcoin, this is the Bitcoin Trust, rallied 370% since then it dropped over 50%. And so therefore 5%, that's just daily volatility in this thing. And actually, if nothing else, now we need a little more work. I'm going to show you what we need to do, but if nothing else, I view that as potentially bullish, because what I love are bear traps, false breakdowns. So you had two drops below that level, pretty well watched level, I believe. That's why it was my target from months ago. And if we can regain above there, what happens is you have shorts that pile in. When they see 882 broken, they short. And then when you get back above it, they get squeezed out. So you can get a short squeeze. Plus, there's a technical pattern, a bullish falling wedge pattern, positive divergence down here on the RSI. And that's that same bullish falling wedge on the 60-minute chart I showed you here. So a little more upside should break us out. We need to get through this resistance zone. And then we have these two targets up here, T1 or T2, which is the first of 1183 or the downtrend line. So like anything else, it's one trade. It either pans out or not. But it's more of a still little work to be done. Again, break out above this trend line. That would certainly help and maybe spark the rally. Should my second target get hit, you're talking about a 36% rally in Bitcoin. Get in, get out. I've made the case months ago that I believe Bitcoin is in a bear market, and that the rally in 2018 was nothing more. 2019, I'm sorry, was the first major bear market rally within a new, much larger bear market. Bitcoin to me was a big bubble that burst back then in 2017. And other bubbles that burst. Look, I love playing bear market rallies. I love trading long, just like I love shorting during uptrends. It's wherever the opportunities are. If you followed the site for years, I was uber bullish and almost always long the marijuana stocks, the cannabis stocks, way back before this ETF even came out. This was first to market ETF, MJ. And back in 2016, 2017, would post frequent updates and trade ideas on the cannabis stocks. Many of those double, even triple-digit gainers, well over 100%. And then at this point in time, I started getting away from that and talking more. Well, first of all, look, these corrections were identified at the time in advance, but more so fundamentally, I made the case. I'll tell you real quick, if you're new to the site. Among other things, I think these cannabis stocks were way overhyped. Well, there's no doubt about that. You can't argue that. You look now, and this sector ETF has fallen about 60%. So it's been more than wiped out from the highs right here. In the fundamental case that I made, everybody got overhyped and thinking, oh yeah, everybody's going to legalize, and it will. I think it'll be legalized at the federal level at some point in the U.S. The trend, obviously, in most countries and states has been towards legalization. But the problem with that is, it's here to stay. And I think what happened, the states and countries like Canada saw big dollar signs. Said, look, everyone's doing it anyway, so why don't we just legalize it? We'll tax it. We'll make a lot of money off that. Well, yeah, great in theory, but not in reality. And this is what I said back then. And I've read articles since that justify this. That look. You want to, you can brew your own beer, you can make your own wine, but it's a pain in the butt, from what I understand. My wife years ago bought me a beer brewing kit. I looked at the instruction, I'm like, no, you know what, I can go up the street to ABC and buy a, good craft beer for whatever it is, a 6-pack, $10 a 6-pack. And it's going to taste way better than anything I'm going to brew. And so that's just me. I'm fine with that. And I get people want to do their own thing. But my point is, it's hard to do that. So that's why you buy beer, wine, and spirits. You can't. You can buy a great bottle of wine, a really good bottle of wine. A lot of places for $10-15 now. That go ahead. Good luck if you're going to make wine that tastes better than what you can get. $20 a bottle up the street. But all right, I'm digressing. But there's the point here: is that cannabis is not the same thing. You can go online to Amazon. You can buy a kit, a hydroponics kit, grow your own. You can plant it in the backyard. So, in other words, once they make it legal in that state or in that country, it's legalized at the recreation. You can grow your own. And the thing is, and this is what they're seeing, is the illicit industry, the drug dealers, your neighborhood drug dealer down the street still selling it. He's undercutting. He's selling, he or she, good weed for a lot less than you can buy it through the dispensaries because it's being taxed like crazy. And so therefore I see, here's the bottom line, is there's always going to be the fact that it's basically it's a weed. it's easy to grows at almost any conditions. I don't know the whole specifics of getting it right and the good strains, but I just can tell you this, that there'll be people that will grow. There'll be an easy black market that's going to put a tremendous pricing pressure on the legal product, and so therefore I don't think the market is as big as many have anticipated, and I think that's also being priced in these stocks now. So everything I just told you the last few minutes of talking, that's fundamental. Technicals are charting. Fundamentals is why I think that it was a bubble, and why I think that a lot of those companies saw highs that they may never see again, just like Bitcoin saw a high I don't believe will ever be seen again. Now, this industry is here to stay, with that being said, so there's going to be opportunities, and whether it's in a bull or bear market, I will trade these. I will engage and disengage the sector when these trading ops present themselves, like these divergent lows. Go long, divergent highs, you go short, so that's where we're at right now. So let me do an update on the charts. So far, so good. MJ, is moving up. It's not an explosive rally yet, but there's still plenty of upside. If my second target's hit, it's another about 13.5%. This trade's profitable, as are some of the other ones. I want to see a little more work, a little more upside in some of the big names. The ones that I follow and took long personally are CGC. These again are the big ones. Nice falling wedge breakout. So far, so good. It's moving up, and I still think this one continues up to at least this level, this intersecting downtrend line in the 24-21 level. That gives us another 10% upside. ACB, this one's also an official trade. Breakout back test of the downtrend line here on the daily chart, and you can see here coming up, it needs to pop above that 384 level. That was our entry price, I believe, and it popped it, fell back below, but it's testing it again. Needs one more pop above that level, should do the trick and send us up here to at least my first target, if not any of these other targets there. So like I said, a little more upside, I believe, will spark a real short covering rally. Tilray ran, right, that's one, and great, and that was an official trade, but I want to see participation in these others. I want to see ACB start to move. There's a lot of them that have taken off, and I've covered these in a video recently. CRBP, I mean, look at this. Since the breakout, these are big gainers, and that's why I like this sector. I like any sector that has a lot of potential. I don't care what I trade, as long as it has a ticker and I can chart it. So there's about an 18% run on CRBP. There's the Canopy Growth, the Canadian shares. Green Organic Dutchman. I'm trying to find some. Cron, the CRON. There's another one that still looks good. Breakout there. And Tilray, of course, we know that one hit the first target yesterday. Plenty of upside left if the momentum continues. But make no mistake about it, they are in a bear market, a downtrend. And so I will throw these stocks away without even a thought. If I see something I don't like, move on to the next one. Sometimes these bear market rallies start to materialize, and just as they start to look good, they get sold into with the next leg down coming. But if we can get a little more upside here, so Tilray, for example, if we break above yesterday's highs, I see about another about 40% upside potential in the stock right there, about 35 to 40 to these this resistance zone and downtrend line there, and that's about it. There's always certain ones out there. There, I covered in the video a lot of the smaller names. Let's just watch those big names for now, and so far so good. Quick update on crude. Crude oil had a little small divergent high here on the 60-minute chart. I pointed out the other day it overshot this, what I believe to be the resistance level that it should have stopped at, 55.54, and it did. It had what I called a momentum-fueled overshoot, a near vertical run, took it over, gave a pull back to that level to provide an objective, a long entry, and came in and tested it once again. So that shows 55.54 is pretty good support. Kind of like gold. There's an uptrend line on the 60-minute chart that if crude pulls back, you might be able to get another objective long entry. But as of now, near term, it's crude's up today because the stock market's up. It trades largely in line with the market. However, I think it's limited. I think before a correction, at most we come up here at about that 56.88 level. If so, we'll extend these negative divergences because these indicators are diverging quite a bit. So I think the upside's limited before a pullback, and if so, A break under 55, 54 would take us back down here to either that 54 to 75 level or that uptrend line right there. So I'm looking for maybe a near-term short trade here. But you're just right now with the stock market rising today, probably not going to get crude breaking down at this point unless the market takes a breather. So that's one to watch. Not so much an actionable trade now. Natural gas, I've covered this one quite a bit recently. If you're new to the site and you go below the post on this video or any front page post, you're going to see a cluster of tags. Those are ticker symbols. So if you click on NG, for example, /NG, the / that denotes it's a futures contract, or UGAS, UGAZ, you can go and that will then load all posts related that include analysis on that security. And it was a couple weeks back that I put up a daily chart on nat gas, and you won't see it here. This is a 60-minute chart, but I made the point that we broke out to the left of this chart above a pretty powerful downtrend line and put in a divergent low on the more important daily chart, and this was the first leg up following that breakout. And so therefore this leg down was the first corrective wave. That's the case that I made, and we put in, as I showed recently, a divergent low right here. We have a downtrend line, so that's your bullish falling wedge pattern, and then we broke out and we were moving up, and everything was going pretty well until NOAA, the National Oceanic and Atmospheric Administration, if I got that right, NOAA, came out with a forecast. They are expecting a warmer than usual winter, so that knocked nat gas down. But since then, it's recovered. It's recovered all those losses. That's bullish number one, that we regained. Usually you see a 3% knockdown. I even put up the statistics that day. It's usually not very good, and those usually happen during downtrends like this right here. There's one. But this one happened during an uptrend, and nat gas was able to recover it. So far, so good. Still some work to be done, but here's the levels to watch right now. You have a symmetrical triangle pattern right here. So a break above that, and then just above that some resistance around 250. So break there, then 250 should open the door for a move up to my next target here, about 260 and ultimately 270. And again, base now, even though I'm looking here and talking about the 60-minute chart, if you go back and look at that daily chart, assuming this was the first leg up in a new uptrend after that big divergent low on the daily and the breakout, and this was the first corrective wave, then what you'd expect is a move that takes out this previous high and the next wave up in a new uptrend. So trade it as you want. It's volatile. Keep your position size small. Excuse me, I had to pause the video there. Still coughing. Still have that cough. A little bit of the chest and head cold still with me. Where did it go? All right, let's go back to nat gas. All right, so point being, keep your position sizes small, but then as far as the charts go, don't fall in love with it. Let's tell you where I think something's going. If it doesn't pan out, it doesn't pan out. So this would be a bad technical sign, a break below there. So you might want to have a stop somewhat below this triangle pattern. And again, if you're looking to add to it, either break above here and or break above that 250-ish level for your next objective long entry on natural gas or UGAZ, whichever one you decide to trade. And the euro. Euro has worked great to the technicals recently, and now it's at that downtrend line I highlighted the other day. I think it was just yesterday. We had a breakout here. You had a divergent low. There was your first buy signal here. Breakout back test. It went up. Hit the first target here. Hit my second target. The trend line is continued third. When we got here, I said I expected a pullback, and so I was able to then reverse that. But I've since gone back from shorting it to back to a long position on the euro, and what I see here is a support down from 111.47 where I said you can start to buy, and then we did get a bounce there all the way down to this trend line, but not below. I would not add below there because that's a bearish technical event if it breaks. But as I'm doing the video, this is an objective entry point for the euro. Now you can trade that via E7, the euro's futures, which we're looking at here. FXE, the euro ETF or ETN. I think it's an ETF. Usually currency are ETNs, but it doesn't matter. One of the same thing to you. As far as the only difference is a tax form you get at the end of the year on the ETNs. And of course, UUP, you could short the U.S. dollar index, because to be bullish on the euro is to be bearish on the dollar, because the euro is the biggest, largest component of the dollar index. Or you can buy UDN, which is the inverse or bearish dollar ETF. And so as far as targets go, well, I'd be looking at the next leg up. So you can see, some of these additional targets here. But I'm also looking at, the likelihood that a major top in the dollar is in, a major bottom in the euro. So I'd be looking more for a swing position for the next leg up. But again, with stops somewhat below. And finally, coffee. Coffee is, like I said, looking good lately. A little more work to be done, but it's starting to, it continues to firm up. It's volatile. It's a volatile little sucker. You're gonna, if you trade too large a position size, and you also need to understand what you're trading. I encourage you to always, know your securities. I've talked about this. Coffee does not trade the normal hours like a lot of other commodities and stocks. It shuts down. What is it? I think 2:30 every day in the afternoon. The futures. So you're going to notice, even if you don't trade futures. You might buy Joe. Joe is the ETF or ETN for coffee. And then you might notice that it flatlines every day around that point, and you might not understand why. Each afternoon it kind of prices start to flatten out, and you don't see any big moves. It's because the futures stop trading, and then they start again later tonight or later at night and trade through the night, and then again have those quirky trading hours. But from a technical perspective, looking good. We have in JO. Again, this is ETN. I like to use the futures to, I'll trade. Sometimes I'll trade the ETNs, but usually I like prefer futures. I'll use depending what account I'm in and how long I plan to be in it. Sometimes use this. This does a pretty good job of tracking. But I look for these divergent lows. And this was our last official trade back here. Went up, hit the third target there, and we came in and made effectively a double bottom, about two equal lows. Downtrend line right there. Coffee's trying to pop above. It had a little false break there, intraday break, but it looks like it's breaking out right now. Here we'll zoom in a little bit. So see, this one we never closed. We popped intraday and closed right back on the trend line. So coffee, it's looking good. If it closes today, this is a breakout, and I may add this one as an official trade here. May do that shortly. If I don't, guys, I've already laid out my targets. Same targets from the last trade. I always set the price targets. I usually adjust them. The line's at 34.70, but you can see I set that target 5 cents below. I do that to help minimize missing a fill. If all eyes are on 34.70, sellers step in early. Sometimes you'll reverse a little shy, so that's why I set my price targets on the official trades. If it says T1 equals T2, that's usually for an official trade, or sometimes I'll share it as an unofficial trade and get the targets out. I just want to say for right now, I may tweak these a little bit because I see a gap right here, and I also have to correlate. It's not so easy to do this when you trade these ETNs because, again, this is tracking the futures, and that's so I'm going to watch the futures, and therefore sometimes when I put out ETNs like this, including UGAS or DGAS, I will then modify the price targets if I see lay out targets in advance and we're coming up to one of those price targets, but yet natural gas has already hit or is about to hit my comparable target earlier, then I'll revise. I'll pull down that the target on the ETNs. I just wanted to let you know how that works. And of course, if you're doing this yourself, what you need to do. If you don't trade futures, you trade the ETNs, I recommend to watch the futures charts. Most brokers will give you real-time futures charts like TD Ameritrade, Thinkorswim will give you, although they don't have coffee on there. They won't give you coffee. But investing.com will give you charts of coffee futures, real-time quotes for free. Okay, guys, I think I'll wrap it up here. You can see, again on this, just back to this screen, what's going on here, and you need to understand, when you trade, whatever you're trading, understand the relationship. This is ES right here. This is a 5-minute period chart, 2-minute chart of gold. You can see this. These are the low today. This is the open in the market, and this is about the open in the market here. And this is not coincidence, guys. That the market's rallying, and now that's taken that bid out of gold and silver and platinum. So And like I said, the markets are poised to break out to new highs. So there's probably going to be a little more upside here. So there'll probably be a little more downside in the metals for now. But I gave you levels to watch on those. All right, long video, but a lot covered. And, as always, skip ahead. I'll try to outline when I put up these on the front page, these videos, what I'm going to cover in what order. And so skip ahead if you're not interested in the broad markets. I like to cover it all because to me it's all very much interrelated. The equity markets, treasury bonds, even risk-off assets like Bitcoin. That Bitcoin trade we have may have a hard time panning out until the market corrects, because there's quite often a flight to safety bid there as well. But as of now, like I said, I'm just sitting tight with that trade and watching for a breakout on that 60-minute chart of GBTC. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you